Index funds are a type of investment that allow investors to be invested in a broad array of different investments within the transaction of buying just one fund. So index funds can be in the form of either mutual funds or ETFs, and they will track a particular index. I'm going to use the S&P 500 for this example because it's one of the most commonly known indexes. One of the benefits of owning an index fund, again, is that you get instant diversification. So if I buy an index fund, whether it's a mutual fund or an ETF in the S&P 500, I now have broad exposure to the entire US stock market without having to do a lot of the heavy lifting of buying individual stocks, which can get very expensive. Some of the shares within the S&P 500 alone are worth multiple hundreds of dollars. So to buy one share, I might be spending tens of thousands of dollars to buy the entire S&P 500 index. But if I'm buying an index fund, it might only cost me maybe $100, maybe even less, and I have the same diversification as if I had bought all of these stocks individually. Now there's actively managed index funds and passively managed index funds. Mutual funds tend to be the actively managed funds, meaning that the underlying fund manager is actually going to be trying to make sure that the index is up to date at all times. They're going to be buying and selling stocks within that particular index fund. ETFs, on the other hand, tend to be more passive. So you may not see all of the trading within an ETF compared to a mutual fund. This tends to lower the cost, which is an advantage, but one of the disadvantages is that there might be what's known as a tracking error, which means if the S&P 500 makes a change, the ETF might not make that change immediately, and you might not own the same stocks as the overall index because the ETF is not directly tracking it at all times. However, this is a great way for new investors or even experienced investors to have instant diversification with their portfolio at very easy access and very low cost. And we tend to use these types of investments here at Vision Retirement for certain clients who are looking for a low cost but diversified strategy to get involved in the stock market without having to buy individual stocks at a very high fee.